Let's talk about why startup investors prefer certain industries. Hi, everyone. Thank you so much for joining me. Today, I want to talk to you about why startup investors prefer certain industries over others. So, I'm going to start out today with a little bit of a story about a client I've been working with. It's a company where there's two founders, two brothers. One of the founders is actually a former Fortune 30 tech giant company. Can't name the company, but he used to work at one of the larger, well known tech companies out over in Seattle. You should know who that is by now. And he used to work there, and he decided to go into the ed tech industry, the educational technology industry. And it's a very, very popular industry right now, particularly with what's been going on with COVID-19. More students are learning from home. And if they're not taking their primary school virtually, maybe they're on summer break, there are plenty of students who want to get ahead and they take virtual courses over the summer. They do extra credits, they do all kinds of things to get them prepared for advanced education in the future. And they've got a very nice solution. They've been around for a little bit over a year now, and they've got very nice monthly recurring revenue as well. So they're doing very, very well. And I've been coaching them, getting ready to start raising their first round of outside funding. So far, the startup founder has funded it out of his discretionary income that he has and his wealth. And so they're ready to raise their first round of funding. So we've been talking about the idea that some investors prefer certain industries over others. Now, there's a couple of reasons that this happens. The first that I want to share with you is that the reason investors prefer a certain industry is because those industries are hot. So it used to be, and it's still somewhat true, that anytime your startup has an artificial intelligence, a machine learning component, that investors would typically be very intrigued with that idea. And that's because things like that are the latest, hottest technology out there. People realize that they're going to make an impact, and it doesn't matter as much the rest of the solution. It's just that they realize the power of artificial intelligence and machine learning to disrupt just about any industry. So investors love the latest and greatest thing, just like the rest of us. I mean, I'm a huge tech person. When the latest and greatest tech comes out, I like to get it. I wouldn't say I'm what's called an early adopter, but I'm usually in the early minority of adopting it. So I bought the first ever iPad that came out, and I actually returned it because it was so new. I just didn't think I was going to enjoy it, and then later I came back and bought it again. So investors really enjoy industries that are the latest and greatest thing, the latest and greatest buzz. Of course, that brings some risk with it. Another thing that investors like in terms of an industry is they like industries they're comfortable with. So in this instance, I advise the client to find investors who like to invest in ed tech solutions. Now, if that investor has multiple companies they've invested in that are competitors to what my client's doing, then it's going to be tough to get an investment from them because they may be too saturated. But investors have industries that they prefer. And if you'll do some research on them, you can typically go out to their websites and they'll tell you the types of industries that they like to invest in. And that's because one of the reasons is because they're comfortable with that industry. They understand the power of, in this instance, ed tech. They understand how the ed tech industry works. They understand how ed tech companies scale. They understand who is looking to buy or acquire ed tech solutions down the road. They understand the industry, so they're very, very comfortable with it. For example, when I come up with a startup, most of the time it's in the fintech sector. Two of my three startups have been in the fintech sector because it's what I'm familiar with. It's the industry, the financial services industry that I've been around for a very long time. So investors also like to invest in industries that they're familiar with. They also like to invest in industries where they have expertise. So not just from a startup perspective, but maybe that's their educational training background. Maybe they came up in Let's pick real estate. And so they understand the real estate industry and their professional background is in that space. And so the reason they like the industry when they start investing is because they can add additional value to the startup that they invest in. They can add their expertise to that startup's bandwidth. So in this instance, not only did I advise the client to go out and think about investors that liked the ed tech space, but also investors that had maybe their own ed tech background. Because if you listen to me in the past, it's not always just about the money that you get from an investor. They can bring other things to the table. So in this instance, we want an investor who can bring contacts in the ed tech space, clients within the ed tech space, expertise, knowledge. Those types of things are very, very valuable. Another area that drives whether a startup investor likes an industry is if they feel like that industry has a lot of barriers to entry. If they feel like there are things that keep other startups from coming in and encroaching on their space. Investors also like industries that they understand the regulatory and compliance based aspects of it. So within the fintech space, mortgage lending is one of the most regulated spaces in that industry. So some investors will still steer clear of that space because they feel like it's over-regulated or too much compliance is involved. Whereas others may feel like that creates a barrier to entry. And so they're willing to go into that space because, again, go back to one of the previous points, they understand the industry. Yet another reason that startup investors choose a particular industry is because that industry may be getting the type of exits and multipliers of return on investment that they expect to get. So if an investor expects a 10 or 20x on their investment, if the ed tech space can show historical data where other ed tech companies have exited and got the investor the type return that they're looking for, then investors will be more interested in going into that type of area. So the point is that there's a wide variety of reasons that investors pick and prefer certain industries. Another point, side point, some of them don't like industries that have taboos around them. So a good one that I can think of would be the vaping area. Some investors may be hesitant to go into that now, or e-cigarettes, because of some of the challenges that companies like Juul and others have had, and they've become a bit taboo. So investors like to go into industries that they understand, they can add value, they get the kind of exits they want. All these things that bring favorable characteristics to the investment is why startup investors tend to focus on certain industries. And if you can understand those things and research those things when it comes to the industry that your startup is in, you stand a much, much better chance of getting an investment from a particular investor. It all goes back to making sure you're spending time on the front end to research these things so that when you approach an investor, you know that your startup is within their appetite. I hope that information helps. Until next time, I hope you find your voice. Have a great day.